Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. It's a less volatile day on Wall Street Monday than investors had seen late last week. Stocks rallying on hopes that the Iran-Israel conflict will start to subside. At the end of the trading session, all major indices did end the day up. And there isn't an official deal, but reports that Tehran wants to resume nuclear talks motivate investors to be optimistic, as well as helped ease oil price spikes. We're going to be looking into what all this geopolitical tension means going forward for markets and portfolios. And the future of nicotine, it's not cigarettes nor vapes that are helping Phillip Morris's bottom line here. We're taking a deep dive into the company whose stock is hitting records, about its recent growth and what to expect next. Well, oil prices whipsawing today as tensions between Israel and Iran ratchet up. Prices first surging overnight, with Israel striking two natural gas facilities in Iran over the weekend. Then prices pulling back as the Wall Street Journal reports that Iran is signaling it hopes for a de-escalation of hostilities. For more, we're bringing in now Dan Alamariu, Chief Geopolitical Strategist at Alpine Macro. Dan, it is great to see you. So let's dive right into this, Dan. So a historic geopolitical moment here. Israel, Iran, that war going red hot. One question front and center, Dan, is just how long we think this conflict could last. When clients ask you, what are you telling them, Dan, and what are the variables that depends on?
Thanks, Josh. Good to see you. So it's an excellent question. How long does the war last, and what does it depend on? I think it will take anywhere from a few days, assuming a war's end is negotiated soon, and I'm skeptical, to a few months. Hard to see this dragging on longer. It's hard both for Israel and Iran to sustain. But then again, war duration can always surprise. I mean, look at Russia-Ukraine. It was not expected to last 3+ years either, although it is a very different kind of war. So it's hard to say how long this will go, but the first thing to say, it's unlikely that Iran wins it. It's not impossible, but very unlikely, and military events to date obviously tend to support that. In terms of victory, or at least ceasefire conditions, I mean, from Israel's perspective, it has to destroy or severely degrade Iran's nuclear and missile capabilities, and that would be kind of what I would call a small victory. And regime change in Tehran, which again, it's a shifting goal, would be sort of more like a tentative major victory. Again, I think the first one is more likely a small victory, a major one, not so much, and I'll explain one in a bit. But and from Iran's perspective, if you look, it wants to survive the war with its leadership and continue to develop its nuclear deterrent and missiles. Now, how does the conflict end? I think there are four ways. The first one is when Israel has judged that it has degraded Iran's nuclear program enough, its military leadership, its missiles programs. It could take weeks to months. The second way is through a resumption of talks. Again, the U.S. may prefer this, not today, but in the next few days. It seems unlikely, again, in the short term. The third one would be if the conflict actually expands, and if Iran, for instance, were to attack others in the region or do something that brings the U.S. into the fight, that would mean a much shorter and worse outcome for Iran. And the fourth scenario would be, which is far less likely, would be Iran carries a nuclear test or manages to quickly get nuclear weapons, and then there is nuclear deterrence established, which leads to a truce. Unlikely, but not impossible. I would say bet on the first kind of 1 to 3 scenarios, which are not favorable to Iran.
Do you believe, Dan, that the U.S. could get offensively involved here? Do you believe we could see American B-2 bombers over Iran?
It appears the U.S. prefer not to take offensive operations against Iran, though it is providing, again, of course, anti-missile defense to Israel. The Trump administration wants negotiations. It has taken a non-interventionist approach, at least to offensive operations. At the same time, it's not going to tolerate a number of potential Iranian actions. So if Iran were to do the following, which haven't happened, that would bring the U.S. in the conflict. And those would be, I would say, roughly 3. First, if Iran appears poised to cross the nuclear threshold. Second, if Iran attacks oil shipping in the Straits of Hormuz or the GCC states. And the third would be, of course, if Iran or its proxies attack U.S. assets in the region, resulting in major damage and or casualties. I mean, these kind of actions would bring the U.S. in offensive operations. For now, that's not, I'd say for now, that unlike those things, unless those things happen, I think that's unlikely.
I know you touched on this, Dan, but I just want to double click on it. Do you believe the regime in Tehran survives this conflict? 12 months from now, Dan, you're back on the show and we're talking about this. Do you think that regime is still in power?
Excellent question. Again, I think regime change, first of all, is almost impossible to predict. I'd say while the war is going on, and again, I don't think it's going to go on for a year, the chances of regime change are quite low. Once that ends, and if Iran loses the war, those chances are going to be materially higher. If you look at a regime change, again, it's unpredictable. The regime is domestically unpopular. It depends on repression to stay in power, but right now it is politically and militarily mobilized. And it's very hard to see how any kind of domestic opponents will go against the regime in a country that is under attack. Not only would that smack even many Iranians, even those that don't love the regime, as traitorous, but a war mobilized regime would have less compulsion, frankly, killing its opponents. Yes, there is a question of whether the military could break now during the war and challenge the regime. My understanding is that's quite hard in Iran. The military is generally supportive of the government. In any case, the only regime challenge during a conflict would come from deep within the regime, basically elite or military fracture, which are hard or basically impossible to forecast. And again, we don't see any signs of it. After the war, if Iran loses the conflict, the government would basically be delegitimized. Iran would be in a very weak position, and the regime change would be quite possible, even likely. But again, for that to happen, Iran would have to lose the war and face a major loss of face and legitimacy domestically. And there are a ton of historical examples of aggressive regimes that fall within, I would say, 1 to 3 years after getting militarily defeated hard. You can think of the Argentine junta after the Falklands or the Slobodan Milosevic regime in Serbia after getting bombed in Kosovo. Again, not guaranteed, but again, regime dynamics change would be on if Iran loses the war decisively.
Let's talk about market implications of all this, Dan, because it was a risk-on day in the markets. There's green everywhere today. I'm just curious what you make of that reaction and response from investors.
I would not honestly read a lot into a day or two of war-related news. Markets are, of course, pricing in the potential for a ceasefire. By the way, Israel says it doesn't want a ceasefire, I think, in the last hour, at least not just yet. Markets are pricing the positive news and the talks. Markets are also buying the thesis, which I think is right, that Iran loses within a month or two, give or take. And the broad view here obviously is bullish and it's kind of buy the dip. So there hasn't been a dip. Interestingly, even Israeli equities in the countries under attack were rallying yesterday, which seems to be, again, making this consensus. Longer term, I think this is right, but there is a caveat here. The war can be unpredictable and some assets may have more room to fall. The current buy the dip market assumes the war may be over very quickly. Again, this is possible, but I don't think markets are properly discounting the risk that the war goes on and keeps going.
What about the price of oil, Dan? Another risk here. Correct me if I'm wrong, but the key here seems to be the Strait of Hormuz, which is still flowing right now. I'm curious what you see ahead. Do you think we see disruption there?
It's a really good question. Of course, if there is a ceasefire, to go to the first option, resumption in U.S.-Iranian nuclear talks, oil prices should drop and to pre-April 11th levels. So the geopolitical risk premium would wash out. But if the war continues, again, prices may go up again because Israel may threaten to take out Iran's Persian Gulf oil capabilities such as Karg Island, which would take a significant amount of oil off market, probably, a $10, $20 spike in the price is possible. Of course, if Iran were to close the Straits of Hormuz to shipping, a risk long highlighted, although increasingly unlikely, oil prices could double. Again, why I think it's unlikely is because the U.S. at that point would probably intervene to open the straits. That's bad militarily for Iran, of course. So it's an incentive for them not to do that.
Last question, Dan. I'm curious what kind of line of sight we have here. We know what Israel's objectives are here: destroy or severely degrade Iran's nuclear facilities. Does Israel have the military capabilities, Dan, to achieve those objectives?
It's an open question. I'd say that the answer is somewhat uncertain. So far, Israel has damaged some of Iran's facilities. This weekend, the assessment was about 20%, but this is still ongoing. It's an uncertain outcome. At the minimum, Israel needs to severely degrade Iran's nuclear program to stop. This is hard to do. Iran seems to lack capacity to bomb deeply dug facilities, such as the nuclear facilities at Fordow. So again, to the extent they can do that quickly, and there is not a ceasefire, this would prolong and complicate the war. And there is a case that, has Israel miscalculated the conflict and in fact went to war without the full capabilities to destroy Iran's nuclear facilities, perhaps thinking the US will join in the conflict? And as I said, the US may not intervene. This is not a given. So the conflict could last longer and could become more uncertain, especially if Iran manages to sort of rebound and show staying power in the conflict. Again, I wouldn't bet on that, but it is something to watch.
Dan, always great to see you and to have you on the show. Thank you, my friend.
Thank you.
U.S. stocks closing higher in today's trade amid hopes the Israel-Iran conflict stays contained. Yahoo Finance's Josh Schaefer joining us now with the trading day takeaways. Josh.
Yeah, Josh, you just hit on really what takeaway one has been over the past couple days of action, right? So you had this escalating conflict in the Middle East between Iran and Israel. There's been continuing news there. There's a report from the Wall Street Journal this morning that said perhaps Iran wants to de-escalate this conflict. That kind of gave us our direction for the day here with the S&P 500 up almost 1%. You zoom out to a two-day, really not a ton has happened, right? So 6,033 for the SPX. That's basically where we were before this, which I thought was just interesting to sort of take that look at it, right? You start to look over a three-day period, even at oil, which has been moving quite a bit, of course, on Middle East tensions, as it normally would. It's really, it hasn't moved that much over a three-day period, right? And so it seems like largely right now the take from the street is, unless this significantly escalates and there starts to be concerns about oil supply that would drive prices higher, it's a little bit of a shoulder shrug from a stock perspective, at least at this point.
I know you were writing about this today, Josh. When it comes to oil, what are the levels we should be watching?
Yeah, so the whole thing here that, like, if I was an investor, why I would be overly concerned about this is you get a spike in oil prices that would drive up inflation, maybe even potentially weigh on the consumer wallet, right? We'd be paying more for gas. Maybe that's an issue. Maybe the Fed isn't able to cut because of inflation. But you need a big oil spike. So what we're looking at here, this is a chart from Data Track Research, Nick Colas over there, and what he highlighted is on a year-over-year basis, normally WTI would go up about 100%. If we was an oil spike, that would then lead to a recession. That area I just circled was the early 2000s recession. You can see in 08, you also got about 100% spike. And then if you go back to the late 80s, you also saw near 100% spike. We're just not even close to that right now. So to give you an idea, I believe on WTI, which I just had up here, Colas highlighted 120. Would be your line in the sand. We're trading at $70, right? So that's a big move higher in oil for us to start getting overall concerned about the trajectory of the US economy. So right now it just seems like there's not enough of a move in oil for investors to be worried about all those other fallouts.
All right, Schaefer, bullet point number two.
Bullet point number two, Josh, I want to just look at some interesting market action we've seen. So takeaway two here is just these IPOs that we've seen taking off. So today, Circle was up over 20%. You saw CoreWeave also take off over 20%. And an interesting trend within that has just been the tech IPOs versus the rest of the market. So this is research from Carson Research. This is dating back to about, I believe it was last Wednesday, so it's not fresh as of today. But tech IPOs since 2024, Josh, since their deal price, up 108%. Then you flip over to the non-tech IPOs, only 50%. So you're seeing a bias in the market right now for the AI trade, stablecoins, cryptos, those hot ideas continue to take off on a day-to-day basis.
Yeah, I talked to Greg Martin over Rainmaker recently, and I was asking Greg, like, what is your just general outlook on the IPO market? It was interesting because he said he did expect a rush of new listings, but then he said he wasn't sure how long the IPO window would stay open because he said all these uncertainties, economy and tariffs, and that by the way, was before Israel-Iran went red hot. Right. So I think he kind of described his view as sort of, I think he said cautiously optimistic.
Yeah, for the overall, right. And I mean, we even talked to a strategist recently that wouldn't highlight the overall uncertainty vibe not really leaving, right? But I think to sort of tie this together too with what we're seeing in the market, a lot of risk on in a lot of areas that are normally sort of circled as speculative tech or these emerging technologies. I'm looking at a quantum computing stock up 27% today, Josh. I mean, that is a large move you're seeing in the market. One other one I've been keeping an eye on too, Cathie Wood and ARK Invest. Yeah. Look at this fund over the last month. Cathie Wood's fund is now up, I think, over 10%. It's up 11% in a month. They hold the stock like Palantir that was at an all-time high. You're seeing that bid in this market again.
All right. Thank you, Joshua. Appreciate it. Oil prices bouncing up and down today as geopolitical tension ratchets up between Israel and Iran. Yahoo Finance's Julie Hyman joins me now with a closer look in our chart of the day. Julie.
Keeping our chart of the day straightforward, this is looking at a 6-day chart of oil, WTI oil specifically. And here you saw the action in oil prices Thursday night into Friday morning, and that spike, of course, that happened when we first learned that Israel was hitting Iran early in the hours there, that is Eastern time, as we learned that hit had happened, that those strikes had happened. And then, of course, we saw some volatility as Iran retaliated over the weekend. Not much oil trading happening there. But then Sunday night, when you see futures open up here, you saw again a spike. But how did that translate? I'm going to switch it over to a 2-day look now. Quite interesting to see the action and the come down that we ended up seeing in oil prices. Now, as we have talked a lot about, this has to do perhaps most directly with a story in the Wall Street Journal that said that Iran was looking to sort of bring down tensions, come back to the negotiating table around its nuclear agreement, and whether or not Israel is willing to relent. We saw the markets react and oil prices really come off the boil there. As we talked about with Stephen Schork earlier in the program, there still is a possibility of a ratcheting up there. In fact, Schork said there's the possibility that this could be the most meaningful event for oil since we saw Iraq invade Kuwait. So that was a big event indeed. But for right now, the markets are not reacting in that type of a fashion. We'll see how sustained this conflict ends up being, and if indeed it does have more of an effect on Iran's ability to export oil. Most experts saying it is unlikely that the Strait of Hormuz, through which that oil is transported, would be closed. But again, Schork doesn't put it outside of the realm of possibility. Again, for now, pretty quiet here in the oil markets, Josh.
All right, thank you, Julie. Well, Phillip Morris stock getting a good buzz from its smoke-free nicotine product, Zyn. That stock hitting a record close on Friday. For more, we're bringing in Yahoo Finance senior reporter Brooke DePalma. Brooke.
Good afternoon, Josh. Certainly record high stock price for Phillip Morris International. On Friday, it hit more than $184 per share. And what's really driving that is that Zyn product. Really, it's smoke-free portfolio. One analyst telling me that this is part of a multi-year growth story with lots of potential around that smoke-free business. Ever since it acquired Swedish Match a few years ago, that was the owner behind Zyn. And what we've seen here is this demand just keep growing. From Q1 of last year to Q1 of this year, we saw shipments to the U.S. of Zyn cans move from 100 million to more than 200 million, surpassing that 200 million mark. And even since April of 2024, what we actually have seen is this shortage of Zyn here in the U.S. that they say will recover by the third quarter. Now, one thing we also really like here is that it is a high margin business. Each can is only about 6 grams, so it's doesn't cost a lot to make, doesn't cost a lot to ship here. And also this category of smoke-free products is really contributing to Phillip Morris International's revenue here. We know that as of Q1, which was in April, that business growing about 15% as far as revenue goes, $3.9 billion, part of that overall picture of last quarter's revenue of $9.3 billion. Lots to watch there.
I told you how on my commute home to New Jersey every night, on that train, Brooke DePalma, I see those Zyn fans. They're out there.
Say that.
You have been talking also to convenience store CEOs who've been talking about this product and how it's been impacting their business.
Yeah, let's be real clear here. I got this story idea after I talked to Casey's General Store CEO last week. He said specifically the business is growing a lot, and some of that is what our merchants have done to give it more exposure and to reset it. They said we've helped accelerate that. What he said was that in the last 2 years, they've seen this nicotine pouch, smoke-free business grow 200%.
Wow.
In the last year alone, up 54%. I found that pretty surprising.
Yeah,
so
that's
I decided
incredible.
to dive into it.
Great reporting. Thank you, Brooke.
Thanks, Josh.
Appreciate it. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.